Welcome back, everybody, to another episode of Top Buy, Top Sell here in the A1 Edge Finder. If you saw earlier in the week, we put out an episode on Wednesday where the Edge Finder did not have any bearish setups for us on that day. So we actually went over two different buys that we had listed. But today, thankfully, we do have some more data that has come out and we officially have another bearish setup. It is Aussie dollar, so we'll take a look at that as our top sell of the day. And Euro NZD currently has our highest Edge Finder score right now with a +8 bullish bias. That will be our top buy for the day. So we're going to take a look at those two pairs. But before we get into that, let's check out some more data. Now, normally we do check out COT data and retail sentiment, but we took a look at that on Wednesday. So if you want a full breakdown of COT data and retail positioning, feel free to check out Wednesday's video. So instead, we're going to take a look at AAII investor sentiment as well as put call ratio. These are two tabs that deal with overall stock market sentiment, and it's really interesting to take a look at because this stuff is getting updated very regularly. So the AAII Investor Sentiment Survey is essentially a survey that asks investors if they are bullish, bearish, or neutral on the stock market over the next 6 months. You can actually see that right here. The American Association of Individual Investors, or AAII, surveys a number of individual investors and asks where they think the market will go over the next 6 months. And this is taken every 7 days. So once a week, these investors are asked that they are still bullish, bearish, or neutral on the stock market. Again, where they think it's heading 6 months from now. And what we saw a couple weeks ago was a steady rise in bullish sentiment. We saw the week of February 12th to February 18th, overall 42% of investors were bullish. This yellow line here is actually the difference between bullish and bearish. So the higher this yellow line is, the more overall bullish sentiment is. Compared to the neutral and the bearish. So again, we see 42% here, we see 26.8% there. That leaves us with 15.4. Over here at its peak last week, we saw 51.7% of investors bullish on the stock market, whereas 21.8 were only 21.8% were bearish, leaving us with an overall difference of 29.9%. That is very high, very bullish sentiment. But since then, we have come down. We saw 4 weeks of steady growth in the bullish sentiment. But now this week, March 11th to March 17th, this is present day, current week, we have dropped just a little bit. So I'm very curious to see where we end up next week. If we stay around the same level, maybe we'll raise up again, or more the most interesting thing to happen would be if this dips down even lower. Perhaps investors really are starting to shift their sentiment. They really don't want to be that bullish on the stock market anymore, and that can be for a number of reasons. So we'll definitely have to keep our eye out on that because we were growing steadily, but now we have dropped off a little bit. Let's check out put call ratio now. So if you're unfamiliar with what puts and calls are essentially bullish or bearish bets that you can place on the stock market. So a put is a bearish bet, a call is a bullish bet, and this is looking day by day. You can actually see every single day. Here is March 14th. This was yesterday, March 13th, March 12th, March 11th. Every single day, this is getting updated and it's checking for the number of puts and the number of calls placed on the market. And if there are more calls than there are puts, then we are in bullish sentiment. And if there are more puts than there are calls, then we are in bearish sentiment. So on March 12th and 13th, so the past 2 days before today, we were in the bearish sentiment. And then yesterday, we dipped into bullish sentiment. So it's a little bit mixed right now. It really isn't like in this range here. So this is when this information is most useful. Where in like January, you can see starting January 18th, we stayed in this bullish sentiment for a number of days. Some days we dipped lower into the bullish sentiment. Other days we came back up, but it was never 50-50 bouncing forth in between bullish and bearish. Since over the past couple of days, it has been in both bearish and bullish. I think that actually lines up a lot with what we're seeing in the AAII Investor Sentiment Survey, right? We saw that overall bullish sentiment came down from last week, and what we see on a day-by-day basis here is some days are bullish and some days are bearish. So what this is telling me right now is that it's not quite as clear as it was a couple weeks ago where exactly investors think stock market sentiment is heading. I think that they are starting to muddy the waters a little bit here, and they are not quite as clear where they think the stock market is heading. Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com. But with that out of the way, let's go ahead and break down our top buy and top sell of the day. Like I mentioned, we have Euro NZD with a +8 score here. That's our highest score of the day. And then we have our one lone bearish bias Aussie dollar down there with a score of -5. So let's actually start with Aussie dollar. I like to start with US dollar pairs. So we'll break this one down first before heading into Euro NZD. So like I've mentioned, we have a bearish bias with a score of -5. COT data is a -1 score, and retail sentiment is also a -1 score. Taking a look at these numbers right over here, we can see that COT is currently favored short on the Australian dollar at, let's call it 72%. So 72% of institutional traders or smart money traders are currently shorting the Australian dollar, whereas the US dollar is practically 50-50. We don't score something in terms of sentiment. We don't score something a plus or a minus until it crosses over 60%, so that it's clear and obvious that it's favored one direction over the other. But since this is too close to 50-50, this is pretty much coming in as a neutral COT score here on the dollar. Retail sentiment, on the other hand, day traders are favored long on Aussie dollar at the moment. 69% of day traders, retail traders, are long Aussie dollar, and that's giving us our negative score there. Seasonality is a score of -1. We can see here in the month of March, historically speaking, over the last 10 years, Aussie dollar does typically trade lower in the month of March. Our trend reading is a +1 score, and we can take a look at the price forecast to get a better idea of why that is. We'll pull up Aussie dollar in here. This is a daily chart that goes back all the way to, we can see data till February 27th right now. So so I can understand why we have a +1 score. March 6th to March 8th, we had a nice trend higher, sat around this range before dipping just a little bit, came back up, but then yesterday to today, price has come down pretty drastically. That was a pretty sharp drop from yesterday to where price is currently sitting at right now. Let's finish up with our fundamental data. We have an economy score of -2, an inflation score of -2. Interest rates are +1, and labor market is 0 or neutral. Taking a look at these numbers right over here, GDP in Australia right now, 0.2% compared to 3.2%. MPMI, -2.3 compared to 1.5. Retail numbers, 3.2 compared to 1.7. Inflation in Australia, 4.1% compared to 3.2% in the US. Unemployment in Australia, 4.1% compared to 3.9%. And interest rates on the Australian dollar are 4.35% compared to 5.5% on the US dollar. So there we go. There's all the numbers and data backing up that -5 bearish bias on the Australian dollar US dollar cross. Next, we're going to take a look at our top buy, which was Euro NZD. So let's pull that up right here. Euro NZD has a bullish bias with a +8 score. COT is a +3 score, and retail sentiment a +1 score. we can see here that rounding this up, this is just barely enough to get us to a overall long bias on the euro, but we also have an overall long bias on the New Zealand dollar. However, our recent change for the euro has been positive, whereas our recent change for the New Zealand dollar has been very, very negative. And let me show you exactly what that is, just in case you haven't seen this before. So in our COT data, this is my favorite chart in the Edge Finder. The latest weekly COT filing compares last week's COT data to this week's, or the most up-to-date COT filing, and it checks for differences between those two filings. If we take a look down here at the New Zealand dollar, we will see that overall 2,043 long contracts were closed. We can see that with our negative number there. So negative 2,043, that means over 2,000 long contracts were closed, whereas 786 brand new short contracts were opened. When it comes to the euro, on the other hand, we see, well, we actually just see a ton of contracts getting closed on the euro. 5,209 long contracts closed on the euro, but 8,666 short contracts closed on the euro. So what that tells me is institutional traders aren't quite sure what to do with euro, and they're just trying to get out while they can. But overall, the people who are short on the euro seem to be a little bit more worried than the people who are long on the euro, if that makes sense. Overall, oops, not that one, this one right here. Overall, retail sentiment is short on Euro NZD. 72% of day traders are short, and that is giving us our +1 score there. Seasonality is a score of -1. We can see, again, historically speaking, in the month of March over the last 10 years, Euro NZD does tend to trade lower in the month of March. Trend rating is a score of +2. Let's check out the price forecast and see if seasonality is lining up with what it usually does. I have a feeling that in this case it is not, and yeah, that would be the case. So from February 28th to March 1st, we saw a nice big pop, slowly rose a little bit more before coming back down, kind of settled in this range for a bit, and then on March 11th, March 12th, we started making our next move to the upside, and yesterday to today, we had a really big jump in price when it comes to Euro NZD, so that's nice to see. Finishing up with our fundamental data, we have an economy score of +2, inflation -1, interest rates 0, and labor market +2 as well. Euro area GDP growth 0% compared to -0.3% in New Zealand. MPMI -0.1 compared to 2. Retail sales numbers 1 compared to -1. Inflation 2.6% compared to 4.7% in New Zealand. Unemployment 6.4% compared to 4%. And interest rates on the euro are 4.5% compared to 5.5% on the New Zealand dollar. So there we go. There is all the data and numbers backing up that bullish bias +8 score on Euro NZD. I hope you guys enjoyed this video, and if you enjoyed the Edge Finder, you can find it in the description down below or on our website, a1trading.com. And don't forget that you can get a promo And don't forget that you can get a discount on the Edge Finder when you use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.